Yo, yo. How's everybody doing? How's the audio going? Hold on one second. Clean these glasses up. If somebody can just type in and let me know how the audio is, I'll get this thing moving. I notice there's always a little bit of delay with this webinars on air app. All right. Thanks, RJ. Appreciate it. All right, folks. Happy Monday. A lot of stuff to do. So let's go and dig into these markets and see what the heck is going on. Dun, 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 dun. All right, cool. I think we got this thing started. All right, let's get this thing moving. And you guys, somebody send me a quick text or something if something happens. I'm on screen share. So last week we had, man, I missed 2 of the trading days last week traveling, but last week we had really the best trading day of the year, as you can see, the trading week of the year, about a 5% bounce in the markets. And you can see this pattern is a very prevalent pattern. That's one of the things that makes trading so tricky, because when you're in it short term, and that's why I always advise people not to day trade till you learn how to actually swing trade on longer term charts, because when you're in the moment, everything looks so dark and everything looks like it's going to crash. But we see this type of pattern all the time where the market just kind of makes this like V-shaped bounce. You get a certain level of oversold, and then you start to make these V-shaped bounces. But what happens is when the markets are really dipping like this, the action is so bad that you always get a little bit trigger shy, and then before you know it, it's off to the races again. And that's what happened this time. This time we did have a break of the 200-day moving average, which is very rare. We haven't had one in, I believe, 500 days, something along that end. So almost 2 years. So that was a little bit dicey. But one of the things that we have noticed is and then before is the 50-day moving average. We used to knife through the 50-day, and then that would start us off back to the races in terms of new highs. And this time we ripped through the 200-day moving average. So now comes the tricky part, though. So the easy money's been made. You'll see all these stocks that we like to trade. Really have like these monster rippers, right? So the easy money has been made. And so now, now what happens? Well, originally, if we just pulled back like this and then just bounced, I'd be looking at a lot of bear flags. But what you're starting to see here, if we can back and forth fill on some of these stocks, that would set up, bottoming patterns. And so one of the things that I always like to do is look at, really like a lot of individual stocks for clues to, what's really going down. And so when you start to see like this type of action where you get the flush, but then you start to see sideways out for a period of time after the lows have been made, well, that's, a short-term bottoming pattern. And so, any kind of upside break of this type of area, sets the stock right back off. And so that's kind of where we're seeing in the market with a lot of these stocks. Now, with the individual market, when you're playing these type of oversold bounces, your upside targets are, really the 4 prior levels of breakdown, your moving averages, things of that nature. And so we are starting to acquire really whatever upside targets people may have had from this oversold bounce. So now the tricky part comes in. What happens now that you're at resistance? or multiple levels of resistance coming in. And then, this trend line break should be a very strong level also. What happens, because that impedes us right back to the new highs. And so, you're kind of your best case scenario, at least I think, if we want to see a long-term, better bounce, would be to really back and fill this area for, a handful of days, and allow some rest so that you can really bust through these levels of resistance with gusto. Because right now you have all these different types of resistance kind of converging on top of on top of where we are, on top of now a short-term overbought condition from an oversold. So we have some odd areas to navigate. Now, in the past, we've seen this market, though, once that V-shaped bounce starts, it doesn't just take a break after 4 or 5 days. It can often go for, a month. But one of the things that you'll see is after that initial period of a handful of days where that big rip happened, there's a lot of choppy sideways type of movement. The market gets a little bit tired. So that's something to keep an eye on, is that, we've kind of hit really that big thrust that happens off that oversold condition. And then it's very normal to get this kind of sideways movement. And we've seen that over and over. And so this is where the market gets tricky, because nobody believes in a bounce. And then by the time you figure it out, the easy money has been made. The easy money has been made. And so now you've got to play the next setups in the market. And so that's where you got to be really, really careful. If you're a day trader, it doesn't matter as much. If you're a swing trader, then you can't just start initiating a bunch of new positions after, the market has just made such a move. You got to let it chill for a couple days till you get and work off some of that overbought condition. So you can see here too, after we were having this just big flush, this is a very common type of bottoming pattern. You get a market that flushes and it pops. You see, you get that big pop, and then boom, you flush back down, get near those prior lows. And then when it holds and you can break levels of, basically your first levels of upside targets, that can set off, the potential run. So that's usually how these type of bottoms are made. It's never like a big swoosh. You usually get a pop and then try to retest, and then you take a go at it. So let's take a look at, so we got the S&P, the Uncle Russell, so the Russell 2000. Also, you can see this big breakdown mark, and we flushed through, and then we've ripped right back above. Okay, so that's one important thing. This should have been a really strong resistance point, and we just kind of buttered right through it. So now we're getting back into this congestion zone. The Russell 2000, due to how long it's really been in the range, which is since January, so the whole year, you're getting right back into that congestion zone. So, another thing that we really got to keep an eye on is understand that, a lot of the easy money's been made, and the action could be choppy for the next handful of days till we either rest, or, the worst case scenario would be, right, that we hit resistance and then we come all the way back down, which is always a possibility, So we had this kind of rollover pattern on the NASDAQ also, really knifed through all these levels of support and then right back into resistance. So similar type of look with the S&P. You can see we're really not that far off from highs. But once again, even in longer term kind of rollover patterns, it's not uncommon to come back and retest and then come back low. So we won't know till we know. The only thing you can do is you start watching, your levels on your daily chart to understand where the market can go and where the market can fade, and then apply, kind of your bullish case scenario, a neutral case scenario, and a bearish case scenario, really what can happen. And then, for me, I like to look at like 30-minute charts to really start getting a gauge of what's happening, underneath the hood, and look for signs of deterioration that would tell me, okay, our upside on the bounce has been acquired, and now we're starting to trend back in the other way, and then we start to make new scenarios essentially, and then rejigger our watch list also. Something always to kind of just keep an eye on. Now the good thing is, right now we're in the midst of earnings season, so regardless of what's happening with the market, we are getting a lot of action in individual stocks also that can really give us some juice in terms of what we want to be playing. There's a lot of action going on right now. Let's take a look at some of the stocks on my watch list, and then we'll kind of keep moving. Dun, dun, dun. So stuff like this. So in case the market rolls over. So if the market rolls over, I need to have a list of longs and short. So if the market rolls over, something like this would be a stock that I'm looking to short, because after this huge breakdown, we've just bounced kind of right into your moving averages. And so we get an easy way to manage our risk. If the market starts to roll over, we'll have some easy shorts for essentially what would be, a bear flag. Same type of thing with a stock like an LNG. After this big rip down, we've popped up, and if we start to roll over, then we'll come back and retest this low. Now, one of the things to watch is like very similar, like we just saw in YY. If you consolidate too long, then it'll start to become a bottoming pattern. Watch your short-term moving averages and the volume patterns within it, the range, and look for clues to say, hey, I'm looking at this for a bear flag. I'm super biased. I may need to flip this around and, take a go at it in another manner. Same type of deal with SWKS. It's an easy way to really manage your risk. If the market rolls over, this thing will just pop back under its MAs, and you'll start to see it drift all the way back down to the 200. So like beta would be, this is another stock you could play a couple different ways. If the market rolls over, then you'll probably come and see a retest of this, $60 range. But one of the things that you're noticing is, after its initial pop, we're starting to consolidate here. And so, if the market can consolidate also, and provide some breather, that might give some of these stocks like this, the gas it needs to really go back and acquire higher moves. And so, there's a couple ways to play this stock now in terms of, really depending on what the market does. And I like the stock itself because, it tends to have exaggerated moves to the upside and downside. It's not uncommon for the stock to move $4 or $5 on a given day. Dang, same type of thing, right? The breakdown pullback right at your MA. Yoku, same type of deal. But now, see, this is the thing with Yoku. It's been nailed for so long. You're starting to see some consolidation here. If you start to see some sideways movement on this thing, then that could tell you that the bottom has been put in on this stock. And, it might be off to the races for something like this because it's been beaten down so bad. LNNK is not a stock that's ready just yet. This stock's been flying on the Ebola news. But for some reason, it doesn't crash like the rest of the stocks like Lake and APT. The rest of these guys, they pop and then they fade, and they've been trying to bounce, but they just don't hold. Similar with APT, give back so much, but for LNNK, it's been really holding up here pretty well. I'd be watching this one for some type of flag to develop in the week. If that happens, it would not be, uncommon to see this thing make a run to 50. As of the moment, as you can see here, it's just way too extended to be initiating, any positions beyond quick day trades. It is a good day trading vehicle as it's got the volume, the float's pretty low. It has a wide intraday range, which is, really necessary to day trade. You can't initiate anything longer than, a handful of hours, though, due to its extension. Data is another stock that I've been watching for quite some time. You know, you can see here we're kind of coming out of range here, but this stock needs to come back here and just back and fill for a few days. Now I think that it could be, you know, it could make a nice move. This now stock is a stock that had earnings, I believe on Thursday. I didn't trade on Friday, I was traveling, but you can see here this is a really key break. You know, if this thing can rest for a couple days also, you'll see this thing right back in new highs, especially with this last push being on earnings. It's got the catalyst that it needs now on the fundamental side to make a run beyond just, you know, a straight technical charts. I really, really like the look of this one. You know, a lot of these guys, a lot of these tech stocks look like they've bottomed out. You can see the same type of pattern in all of these. SPLK also really, really making a nice go out of it here. And it looks like this one could have some potential upside also. Now that we've broken the 200-day moving average and we've been holding over it, it hasn't been, you know, it's been since April that, you know, it's been able to hold over the 200-day moving average. You know, it looks like another one that's got a little bit of upside to it. This Loco stock is still, man, it's really a tease because the range on it has been really decimated. It's not moving as well as it used to. But it's a natural thing when you've got a stock that's been essentially just coiling up for so long. You know, this thing could bust any day. You'd have to really keep an eye on it closely because when a stock is apexing like this, where the wide range gets tighter and tighter and tighter and tighter, to break loose, because most of the time we're looking at things in such a shorter term basis in terms of ticks and pennies, you'll often get these kind of false moves where you think it's going to bust loose and then it comes back into the range and it busts loose. But you've got to kind of think of this on a bigger picture, you know, pattern rather than being so focused in on what's happening, you know, on a tick by tick basis. But a really nice look to this thing. I think this one's probably got a chance to make a move. TKI is a stock that I like a lot. So this is IPO stock. It's lacking volume, so I haven't even taken too much of a gander on it beyond a couple shares for a swing trade. You can see here, $31 dips down to $9.50, pops up. You make yourself a higher low. You're starting to really bottom out here in this $12.50, you know, $13 range here. I wouldn't chase this thing up just yet, but you know, watch this thing for, you know, if the market really starts to bust, you know, some of these kind of riskier names that have been nailed down, especially the IPO sector which was super hot, they'll get picked up. You know, we saw some action in CYBR on Friday while I was gone, and this one's really been consolidating for some time now. You know, you start to see one of these guys really take off. You'll start to see some movement in all the other kind of IPO names that were hurt when, you know, these ones kind of tanked. So you see this one. This is an hourly chart from the day of the IPO to just what it's been doing now. And that's why these range plays are really, really tricky. So, you know, till you come out of all this range, you know, you're going to get it's going to test your patience. You know, that's why playing stocks that are trending is so easy compared to trying other types of trading, because when you're playing a stock that's in a range, even though you know that stocks that consolidate or base are good and powerful, when you're trying to day trade them, while the stock is in the range, most of the time it's just going to fake you out and you're going to lose tons of money trying to catch the breakout, you know, on the before the move actually happens. And so, you know, you get the spike and then it'll just come back down. You get the spike and come back down. You get the spike and come back down. That's kind of what's happened with Loco. You know, guys in my chat room, we've played this thing on and off for a while it's been consolidating. All it does is it pops to 36, 37 bucks. We think that the breakout happens and it just dies down. So, you know, to save yourself the stress, if you don't have the cash flow or you're not able to be nimble enough to kind of trade back and forth within a range, and most people are not, because you got to act so quickly and you have to have such discipline because you have to sell. Well, right when you think there's a breakout, the inkling, when you get the inkling or the signs that that breakout's not happening, you got to be able to get out and then come back to the bottom of the range. So that's pretty stressful. So one of the things that you can do is wait till the range is broken, and then you make your first high or low. And so now you've got that when that first dip is bought, when a stock breaks out of range, well, now you got confirmation that you know, a new potential trending environment will start. And then the trades will be a lot easier because you can add it on dips, you can buy it on breakouts. You know, those are the different things that you can do. But you know, same type of deal with this bad boy. You know, so these are some of the IPO stocks that are just really dormant right now. Every time it pops, you know, you're gonna start thinking, you know, oh, this is it, this is it. But they haven't been holding. So just something to kind of keep an eye on is, you know, let it come out of its trend, and then you start to make higher lows and higher highs, and you'll have a lot of potential upside. It's not like if you miss the initial move, you can't participate. It just means you missed the initial move, you know. And then once the stock starts trending, it can run for 5-6 days, you know. So just different things to think about. I noticed that I do that a lot in stocks when I'm shorting. I do that a lot in stocks when I'm shorting. Is like, you know, I'm trying to time the top or catch a stock in a short while it's just stuck in its range, and all that it does is it just pops a little bit, and then I cover, and then I short when it starts dipping down, and I cover, and I'm just sitting there in this cycle, this range cycle, essentially, where you keep thinking that something's going to happen, but it's not, because you're just in the range, and that's how it happens. And before you know it, all those $200, $300, $400 losses, they start to add up, and then you have, like, you know, a much more extensive type of loss. Dun, 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 dun. SRPT. SRPT looks like you know, this will be a stock that's in play today. You can see that coming out of this consolidation over here, some news has been hit. So this should be opening up around here. You know, and your last low is 12 bucks. So you've got some decent downside to it. Looks like this will be probably a stock that we need to be watching today. This is all from Dr. Tim. PTIE is another stock that is really getting busted down. Now, when you're day trading, these dollar stocks are a little bit harder to trade, as you don't get the range on them. But it looks like it's breaking just all lows. What's up, bud? Yeah. Boom, 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 boom. Who peed in your cornflakes? Good. Oh, okay. PBR is another stock that is looking like it's making a gapper down here, and to about 11. The one thing about this stock is it trades very thick. The float on its monster. You can see it, like with all this volume. It kind of trades like GE or Bank of America. It doesn't move as clean as, you know, some of the other stocks that we typically trade. NQ's getting some action today, so that might be a stock that's you can see here it's been grinding higher now for the last couple months. Then it looks like we had a kind of a hit piece put out on it the other day, and then it's just started bouncing right back and starting to trend here. So these news pieces are not affecting it as much as they used to in terms of the long term. This is a stock that's been badly beaten down, VNDA. You're starting to see a gap here. The one issue that I have with some of these type of stocks is when you gap into these levels of resistance, they're not as clean. So you may get some quick day trades out of it due to the PR and things of that nature. but that real big thrust, you know, the breakaway type of gap, you know, like something like an, you know, RGLS, this is what we call breakaway gap. You know, when you start to clear all levels of resistance, you get a much cleaner type of move to the upside, just due to the fact that there's no monster resistance running around. Any of you guys use the new channel bar at Trade Ideas? This thing is pretty sweet. Let me see if I can show you guys. Let's see. Oh. What you got going on over there, Wood? Some Cheerios? NQRM. Okay. RPRX. You know, it looks like there's a little bit of action in Digley over here, but not too much volume. This is one of those stocks that's been really tricky to trade because the volume has just totally died out in it recently. It looks like it's going to take a handful of PRs to get this thing moving again. Dun, 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 dun. It's not that much action coming on pre-market today. Seems like a lot of the stuff that's moving is in Brazil. Seeing all sorts of, the Brazilian markets are just getting nailed. You can see here, we're about to test these previous lows from the beginning of the year. This whole thing has been in flush, and they do have 3x ETFs for Brazil, so you can kind of, you know, you can play these bad boys and really get some juice on them. You know, you can see the range is just nasty. So this is the bull ETF. So I believe the bear ETF would be BR, be the opposite. Now, Brazil is very commodities oriented country. So, you know, when oil falls and things of that nature, the Brazilian markets just get nailed. Let's open this thing up to some questions, and then we'll get this thing moving and get the day started. So in terms of the gappers, not that much going on here. I'd keep an eye on this VNDA, SRPT, NQ. Let me see. This RNA looks decent. Chris got an Ebola play. Let me see. The Ebola plays are pretty much, you know, the one that seems to act the best is, you know, NLNK. But, you know, the ones that probably that move the wildest, that have the most upside is Lake. You know, you could see after this monster run, we're starting to kind of bottom out over here in the $13 range. It's not a type of stock that you'd ever can take really for an investment. You know, if something were to happen, you know, you've got to make a quick move and then just trade the intraday patterns in them, as the bottom can just drop out in them really quickly. You saw that on Friday. You got this big run into the close on Thursday. You got the gap. You know, you got the gap on Friday, and then you just gave it all back up and you trended down the whole day. And, you know, same thing happened with APT. You got the gap, you tried to make a move, and then it just got busted up big time. So, you got to be really, really careful holding these bad boys. They're better for day trading environments, but those are the two that seem to move the best. So CMEI, Tim is mentioning this one's got some type of PR out. So, we'll watch this one, see if it's in play. It trades really, really thin on volume. So, I'd watch it at the open. A lot of times these stocks, if they're really something, you'll see 1 million shares go in the first 30 minutes. And that'll tell you it's in play. Hey, Marie, let me ask you this. I waited for your trade plan for 2 months, so you can give me 2 days or up to 2 months. Hee hee. What's up, Terry? I took a swing position in Netflix. Netflix, it busted. It busted down because of earnings. And so, you're already seeing the gap. Hopefully you got a good entry, but you already made a big chunk out of this thing. So you got to really be careful on this. It's not like it's flying up on a lot of volume. You're getting the grind, so it can roll over any day. You don't know if it's going to be up here or here per se, but if you got profits, you can raise up your stops, but you don't know really where that thing's going to roll over because that's an earnings type of move. Yeah, AVNR is another one that I've been watching too. I wonder if this thing's waiting for a PR. It's sure been consolidating for a long time. But yeah, it's just one big giant long flag. This is another one that, if you're trying to play it while it's in the range, you're going to get these pops and then fades until that range breaks. So it will test your patience. It's a biotech stock. So normally, you could always take a swing position, put a stop under, supports, and then let this thing go. But with biotech stocks, you just can't hold them that long, especially for swings. Ford Motor Company, this would be not my favorite of the plays. After this initial quick bottom, you had a nice run up and then just got nailed on Friday. So I would anticipate this thing getting back to previous lows. This would be not a stock I'm trying to long. It definitely looks better for short than a long. Dun, 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 dun. Microsoft is not bad, but see, once again, you've missed the initial run here. Now you've got to let this thing chill. You just can't chase it back up here after such a monster move on this thing. The stock doesn't move that much in general anyways, but you just missed the 10% pop in it. So you can't chase it up here. You got to let that thing relax a little bit and set up. Isabella, MNKD is maybe one of the biggest turds in the stock market. Let me see. So I don't know if it's good for a swing. It would depend on your entry, exit, what you're trying to do with it. I do see your kind of short-term bottoming pattern. It really would depend on where your entry was. ISR, what do you want to, what about it? Jen, if you say, what about ISR? I'm not really sure what your question is. I see, Tim. Dr. Tim is mentioning that he thinks Ford's probably going to get down to $11. So yeah, somewhere in this range over here. Jens, your question, Mr. Werner. Dun, 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 dun. Hey, George, what's going on? Hey, George, by the way, where in Chicago are you? You know, I got a really sharp. Yeah, short, that doesn't tell me anything. You got to give me an idea what you're trying to do. Just because something's a short. Is it short at 10? Is it short at 1? George, you know, my thinking on this bad boy is I'm naturally always thinking short. You know, usually after 3-4 days of run up, you get the crack. I did make a mistake in trying to try this thing the other day, and that was a day early. We'll see how it goes. You know, these things, the problem is on the technical side, I don't know what's up with the PR, but on the technical side, this is a breakaway gap, which is very, very powerful. They can go for a little bit longer than you think, but typically after 3 days, stocks take a rest. I don't have any, I don't see really ISR as anything. I just see it as a stock. Not really sure. I don't have any, I don't got anything on it. Man, I guess you'd almost have to lean long on it. You know, it's just had 1 day of move so far. Yeah, ACHN doesn't look so bad. You got kind of coming out of this, you know, coming out of this range over here, you're starting to flag over the 50-day moving average. Looks like you might get a little bit of push. You know, Jen, whole number resistance only works if there's a setup. You know, you don't just start shorting stocks because it's at a whole number. That's not the point of using those as areas. Those are areas of interest for, you know, a setup. But just because something hits 10 or 15, that was a fart, but it wasn't me. It was this fat boy over here. Very true. That was not me as a fart. You know, Chris, I'm not sure where Maribeth is. She's got all sorts of business to take care of that she's been working on. So we got her on a new project. She might be MIA, getting some things done. All right, folks, I got to get ready for the markets. I'll see you guys in the chat room in 15 minutes. Guys, I believe we'll be back on Wednesday for Breakfast with the Bulls. I got Paul coming on, so I'll put the links on Twitter in the chat room. Take care.